Today I'm going to be talking about how I use daily cycles to pass an FTMO challenge. We're going to go over my approach to a couple of the rules, the risk management strategy I use to avoid a large period of drawdown, as well as the strategy that I use and a couple of my favorite trades. So let's get into it. We are going to get onto the charts. I know that's what you're used to. But there's a couple of things I want to cover, like my approach and the risk management, that aren't on the charts. But don't worry, we're going to get there. So let's start with my approach. Now, the first thing that's very important to understand is that there's no time limit anymore. There used to be, now there's no time limit. It's 10% and 5%. And it can take as long as is necessary. And this is a very important mindset to adopt before starting to trade the challenge, because it relieves a lot of pressure. You know, for me personally, I was able to just put this in my trade copier and trade as usual. I know there's no time limit, so it didn't matter how long it took, and I just traded as usual. Now, where a lot of people may go wrong is the fact that even though there is no time limit, they put a time limit on themselves. They want to say, cool, I want to pass both phases in 2 weeks. I want to pass both phases in a month. And yeah, you may be able to do that, but you don't want to restrict yourself because the rule's been taken off, right? So you don't want to just put it back on for pretty much no reason. So yeah, it can take as long as is necessary. I accepted that. Just to play devil's advocate a little bit, depending on how much you care about passing in relation to how quickly you want to get funded, you can try and speed up the process by upping the risk. I personally stuck to my regular risk settings, but if you don't mind losing an account or two to get that funding faster and you're confident in your system, maybe you want to go 2 or 3%. Now, the other thing in terms of my approach is, even though there are rules once you pass for trading news, those rules don't apply whilst you're taking a challenge. Now, I personally think that that is purely there to set up the trader to fail. You know, maybe they get impatient and they want to trade news to get it passed quickly. They don't have that limit taking a challenge, and, you know, potentially that leads to their demise. But for me personally, I'm not going to be doing stupid stuff like that. For me, it just allowed me to put it in a copy trader and not worry about any extra news rules, right? So that was good in terms of my approach. Obviously, once you pass, you have to adjust and make sure that you're on point with the news rules. But for the challenge, that was all cool. Now let's talk about my risk management system that actually helped me reduce the amount of drawdown that I was in. So I risk 1% as standard, right? But after 2 losses in a row, I halve the risk. If I still take another 2 losses in a row, I'll halve the risk again. And what this is going to do is it's going to make your equity curve less steep, right? It will start off steep because you're on your regular risk. But if you're on a long losing streak, or, you know, a 4 trade losing streak, 3 trade losing streak, you are going to end up losing less if you use this risk management system. And then if I want to increase the risk back, I just have to make back half of the loss that I took with the last risk setting. Okay, now what this is going to allow me to do, like I said, reduce my drawdown. But then once I do get those winning streaks, I'm able to up my risk pretty quickly and, you know, be able to benefit from those winning streaks that I'm on. And what this looks like in terms of the numbers. So let's say you lose 8 trades in a row at 1% risk. A lot of prop firms, 8% is your max drawdown, right? So you lose 8 trades, you're done. Now, if you were to use this risk management system and lose 8 trades in a row, you're only going to be down 3.75%, right? If you was to lose 2, half it, lose 2, half it, lose 2, half it. You would have to lose 8 trades in a row to get down 3.5% or a little bit more, okay? So it's a massive difference there. And you're actually not going to blow a challenge using this risk management system, because after you reach 0.125, if you were to stay there, you would have to take another 34 losses to get to minus 8%, right? So instead of taking 8 losses, you can actually take 42 losses, right, with this risk management system in a row, which isn't going to happen. So that's how I manage my drawdown. That's how I reduce periods of drawdown and still am able to reap the rewards when it comes to my winning streaks. And you can see that here when we go onto my equity curve, or technically this is a balance curve, but it's almost the same thing. So you can see here when the balance dropped here, this was my longest losing streak, right? There's a decent amount of trades making up that losing streak. And you can see that the equity curve started off pretty steep. That would be when I'm risking, you know, 1%. But as I started to lose and continued that streak, I halved the risk, right? And I might have halved the risk again. Now you can see that if we carried on with that trajectory, right, and we kept dropping the balance with the same risk, I would have gone back to break even, right? From 8% profit, I would have gone back to break even, which isn't good. But with this risk management system, I managed to draw down and I came back down to just over 4%, right? So I halved the amount of drawdown that I would have taken. And then as I started to recover that loss, I increased the risk, and then we hit the profit target. So that is how I managed my drawdown using this risk management system. So that's the system I use for the challenge. Now let's talk about my actual trading strategy. So my system is very, very simple. I start on a higher time frame, and we're looking for a higher time frame bias. Right now, for this bias to be effective on the intraday, the 4 hour or the 1 hour have to be in line at a minimum, right? So if they're out of line, if I'm trying to buy but the 4 hour and the 1 hour are bearish, I don't take it. If I'm trying to sell but the 4 hour or the 1 hour are bullish, then I don't take it, because the 4 hour and the 1 hour govern the intraday. So being an intraday trader, I want those to be in line. And then on top of that, if we can get the daily, weekly or monthly in line as well, that's just like the cherry on top. So if I'm bullish, I want to see the 4 hour or 1 hour bullish, and then ideally at least one of these on top. If I'm bearish, I want to see the 4 hour or 1 hour bearish, and then ideally one of these on top of that as well. Again, it's just an extra cherry on top. So once I have that, I simply identify, are we going towards internal range liquidity like these FVGs, or are we going towards external range liquidity like these old highs and old lows? I can trade in direction of either, as long as I get the confirmation within these highs and lows, right? So let's say this is a weekly trend. As long as the 4 hour or the 1 hour gives us a shift in there, I can trade towards the old high. If we get the shift within here, I can trade towards the internal range liquidity. Same if I'm bearish, right? As long as the 4 hour or the 1 hour is bearish, we can target these old lows. And then as long as, you know, we get the switch here and it switches bullish on the 4 hour, 1 hour, I can target this internal range liquidity, right? So that's how I navigate the higher time frame. Then we jump down onto the intraday, and I'm looking for one of my 8 daily cycles to play out. All right, I couldn't draw them all out here. You're going to see plenty of examples of them in a minute. But basically, I look for one of my daily cycles, and then we go for the entry. And then in terms of the entry, I'm very, very flexible. If I do this right, the entry doesn't really fucking matter. If you've seen my last video, you'll know exactly what I'm talking about. It doesn't really matter. We just want to see that switch in order flow, right? If I'm looking to buy and price has been bearish into that buy zone, we're then looking for price to give that switch, that CSD, and then we can enter off any PD array towards the target. It doesn't really matter. So that's how I navigate my entries. Let's talk about some trades. This first trade was on gold. Okay, the weekly had respected this bullish FVG. We actually had SMT between these two lows as well. So we had that manipulation. And then price was pushing to the upside. You can see we had this bearish FVG that price had failed to get through before. And then the week before this trade actually closed through that FVG. So that was really, really good confirmation. We were now ready to run higher and target this external range liquidity, right? So we had external range liquidity as a target. And then if I go down onto the daily, right, you can see that we have a nice buy program that formed all the way up this leg. We got a bullish order block here. Then we get another bullish order block. And then we respect this bullish FVG. And we're just respecting bullish arrays all the way up, right? It's clean, bullish order flow. And then around the time of the trade, price had just respected this FVG. And then we go on to the 4 hour, right? And the important part is that the 4 hour or the 1 hour is actually in line to take this trade, as it's an intraday trade, right? And you can see on the 4 hour, price has taken this old low. And then we've started to respect bullish arrays like this FVG here. So the 4 hour was in line. And then also if I go on to the 1 hour, you can see that the 1 hour is also bullish, right? So we actually have a bunch of time frames. You have the monthly, weekly, daily, 4 hour and 1 hour. Basically every time frame was in line for this trade. So it was really, really nice. Now it's time for the daily cycle. So if I put on the kill zones, you can see that London had already impulsed to the upside. So that means if we want to see price continue to run, it's most likely to be one of the New York continuation variants. Now I've spoken on this channel about regular New York continuation. This one was a little bit different. The timing is a little bit different, but it's an extremely powerful daily cycle. Okay, so let's get into how this actually looks. So we had this bullish FVG here. That was the buy zone. And then if we go on to the lower time frames, you can see as price has moved into that bullish FVG, price has actually taken out an old low. So we've taken liquidity out. we've got the daily cycle. Now it's time for the entry, okay? And you can see that we formed this bullish CSD, right? We formed this bullish order block, which shows the change in order flow. Now, as you can see, price actually did come back and tap that. But at the time, this was my entry, right? I actually entered off of this inverted fair value gap because I didn't know whether price was just going to fly to the upside. So I entered there. My stop loss was here. And as you can see, to this first high, the risk reward is absolutely terrible. So that was where I went break even. And I'm pretty sure I needed like 2R to pass this challenge, right? So I just literally set the TP at 2R. And if we play it out, you can see that price ran to the target pretty nicely. But you can also see, right, I could have got a better entry if I had let price, you know, come a bit lower and I entered off the CSD. But I'm not that bothered because a lot of times price will tap into the inverted fair value gap and just flies. So that was a trade that actually passed the account. That's why I like that one so much. But it was also a very, very clean example of one of these New York continuation variants. Another trade that I took was on Euro USD. So the bias for this one was very, very obvious, right? Price was aggressively running towards this old low. If you think about the daily cycle, this was Tuesday, this was Monday. So Monday pushed, Tuesday pushed. That's a classic sell week. So Wednesday is a high probability sell day. And yeah, we're clearly targeting this low. So that was my bias. On the 1 hour, we have this bearish order block. That for me was my sell zone. And now we really just want to see the daily cycle, right? And if I put on the kill zones, you can see that Asia was actually the first to tap into that bearish order block. And this one was a London protraction cycle, right? So you can see that we have, this is 7 o'clock here, right? So London kill zone has formed the high above Asia. Asia was swept nice and aggressively. So that is that London protraction cycle. And then from there, it's time to go ahead and get the entry. I've played it out a little bit too far, but I entered after we got this 15-minute CSD. So we formed that bearish order block and we also formed this inverted fair value gap. And I put my entry on the inverted fair value gap with my stop loss at the high. You can see that price tapped it and then it started to run away. And we actually ran very aggressively in London to target Asia's low. Now, the reason I like this trade so much is because of how much of the daily range I actually captured. I'm pretty sure I held the trade until about 140, okay? So if I put this vertical line on 140, so let's see how far this trade actually ran by the time it was 140. You can see that we get a pretty decent risk to reward. It's about a 1 to 7 by 140, right? If I stretch that out, you can see it's about a 1 to 7, just over a 1 to 7 by 140. Now, I did call this trade out to the free Discord. It's not a signal service. I'm not advertising it as a signal service. It's just my personal predictions. But I called this out to the channels, right? In the free Discord. And you can join with the top link in the description completely for free. This next trade I wanted to talk about is another one on gold. And I hear people talk a lot of shit about gold, actually. I hear people say gold will ruin your life. Gold is just going to blow your account. You're just going to get manipulated. It's the most risky pair to trade. I personally don't find that to be true. With my personal strategy, using daily cycles, I find gold to be very, very consistent. I find it to be actually one of my favorite assets to trade. So if you're hating on gold, you need to get with the daily cycles, mate, because it will change your life. I swear to God. I've been trading gold for so long and it's so clean. So let's get into this trade. It's the same higher time frame context as the first one, right? The weekly is expanding. You can see on the daily here, we have a daily buy program. If I play it out to the day before, we actually had this FVG, right, that got tapped into on Monday. I remember I called this out in the Outlook. And then I was expecting another run to the upside, right? A bullish day. That's what I was expecting in terms of daily bias. Now, I actually did take a break even before getting this win on this trade. And that's one of the important things that you can take away from this trade. So if I play it out a little bit before the trade that I actually took. So I took this trade, the first one in London, okay? If I put on the kill zones, this is the Asia low of day cycle that I spoke about in one of my most recent videos. I might link it, I might not. But I was basically looking at London continuing to the upside, right? And I got into a position here, right? I actually got into this trade. I must have had my stop loss somewhere. It was somewhere. I'm not going to bother because it hit break even. But I basically went break even here. And I was like, cool. There's a high chance of it coming back. But we might as well just let it run. It's risk free now and it's a valid trade. And you'll see that it got taken out of break even. Now, I wanted to talk about this because it's an important lesson. My bias was still intact when this happened, right? We're still bullish. We still have bullish targets up here. I'm still expecting the day to print as a bullish candle. Okay, so just because that one particular trade failed doesn't mean that the whole trade is out the window. This is what I really like about daily cycles as well, right? It's like plug and play. You get a daily bias and you just wait for a daily cycle. I had the daily bias. I waited for the cycle. That trade failed. We still have the bias, so all I have to do is just wait for another daily cycle to present and I can play it. So if we go on to the 30-minute now, okay, so what I just marked up there when I was yapping is a 4-hour FVG. That was the buy zone, okay, and if I play this out, you can see that price enters that buy zone outside of session, right? So this particular daily cycle I haven't spoken about on this channel, but essentially the timing, it's a New York reversal, but the timing is different, okay? The timing doesn't actually have to be within a certain window, okay? And essentially price had taken out this old low, which is liquidity to sponsor the move, into this FVG, and we had the daily cycle, okay? If you want to learn more about this daily cycle, join the daily cycles program because that's where I share all 8 of the cycles, and there's a 7-day free trial as well. So I had everything. Now I just needed the entry, right? And you can see here we have this 30-minute bullish order block that formed. Now, personally, I don't really enter too much off the 30-minute, but this was a perfect example of my model, right? We had everything. It just so happened that the entry time frame was a little bit higher, so I took the trade anyway. And you can see that we tapped the entry here right as New York opened, and then price began to fly. Now, something that is really nice about this particular daily cycle and why I like this example so much is, unlike the usual New York plays, this specific cycle I can hold these trades for much longer, up until around 5 p.m. So if I play this out until around 5 p.m, this is 6:30, 5 p.m is here, right? The close of this candle is 5 p.m. You can see if I had closed this at the end of New York, which is here, right, I would have got a 1 to 3. Instead, I closed out at around a 1 to 4 instead. You do that over a period of a whole year, your gains are going to be way, way higher. So that was a lovely, lovely example of a trade I took on gold. Notice how I didn't blow my account because it was gold? Yeah, you see that, innit? So let's go on to the last trade I really want to talk about. This last trade I want to go over is on Euro USD, and there's a couple things that can be taken away from this example. So in terms of higher time frame bias, price had expanded to the upside and formed this bullish order block. So the daily was in a buy program and the target was very nice, right? We had these equal highs. So we had a target in line with the daily buy program. If we go on to the 4-hour, the 4-hour was also in a buy program. So we have one of those intraday time frames in line, right? Because you can see the 4-hour respected this FVG. Okay. Then I believe my buy zone for this trade was the subsequent 4-hour FVG. Now we want the daily cycle. So here on the 15-minute, you can see that Asia kill zone was ranging within that 4-hour FVG that I just marked. And then price manipulated it nice and aggressively. So that's what we want to see for that London protraction daily cycle. And that's exactly what this example is. So once we get that, we're expecting now for London to expand to the upside. And then the second thing is the entry, right? Because now we're looking for price to shift to that bullish order flow. And if I play this out, you can see we get that here. And this was my actual entry. I entered here. Price formed this bullish order block by closing above these last down candles. So that was my entry. And that's the entry I put in the Discord. Again, it's not a signal service, but I do include when I enter, and I include my trades so you can see my process, but it's not signals, okay? So that was my entry, okay? And you'll see that played out very, very nicely. But the point is, that doesn't have to be your entry, okay? You can enter off of many other PD arrays. If I go on the 15-minute, you'll see that price formed this 15-minute FVG, which, as you'll see, also got tagged, right? If I delete this first execution, you'll see that price came back and tagged that FVG. So you could have entered there potentially. That's actually where one of my friends that I trade with entered his trade. So we both got an entry and they were both different on the same trade. And then if I play it out again, you actually have another fucking entry, right? We have this propulsion block here, which neither of us entered off of because we're lazy and we didn't scale in, which we should have done, okay? But that was a third entry that you could have taken. So don't limit yourself with the entries, right? That's an important lesson to learn from this trade. And yeah, you can see that ran very, very nicely. Easy 1 to 2. If you wanted to hold till the end of the session, easy 1 to 3. Every single example I've put in this video follows the exact same model. It's the exact same 4 steps, and I've put those steps into a PDF that you can download for free. There's going to be a link in the description. The first one is the Discord. That's where you get all my predictions for free. The second one is the Daily Cycles program. That's where you can go and learn all 8 of the daily cycles and get 6 courses containing every piece of technical knowledge you could ever need. And then the third link is going to be the free PDF for you to get that 4-step model. This is how I passed an FTMO challenge with daily cycles. I hope you found value in this video, and I'll catch you on the next one.